So I want to fold in some rumblings that we've been hearing over the past few days along with this call. Rumblings that Apple's going to announce a move to its own ARM-based chips for Macs, perhaps as early as WWDC. This coming after Apple recently bought Intel's 5G modem business. Considering what we've seen from Apple in the past, when they go on a focus for vertical integration like this, what does it mean for margins? What does it mean for growth? How much does that play into a call like this from you?
Yeah, John, I think the call that we're making today is really focused on the fact that the multiple should really expand on Apple, given the visibility of cash flows. When you think about most companies next year, I mean, let alone next year, next quarter, we have no idea how the margin structure is going to play out, how the revenue growth is going to play out. But here you have a company where 200 million iPhones, you can pretty much underwrite in a year where 5G is getting launched, services is going to grow, wearables is going to grow. So the visibility of that 50 or 60 billion in free cash flow that they're going to deliver next year is a real number. And people having that visibility is worth a lot to the investment community at this point, given that every other option that you look out there, most other options that you look out there, there is a tremendous amount of uncertainty with regard to how those cash flows are going to play out. And hence the multiples really get into questionable territories for a lot of them. I think this is the primary fundamental call that we're making, is that you've got a company where the cash flow visibility is super strong. You've got a company where it's going to be a big beneficiary of all the passive inflows that are coming in, because every dollar of passive inflow from an ETF, 10 cents of that is going to go into Apple. So that's going to be a tremendous beneficiary, and the market multiple is expanded. To get your question on sort of what is actually going to happen to the margin structure longer term, look, the vertical integration has been ongoing for Apple for a long period of time. The gross margins in a typical hardware business go under pressure over an elongated period of time because you sort of don't have that much pricing power, but you got to keep innovating on the cost side to add more and more features. So
and I guess that's what I'm getting at, is you talked about Apple's relative stability compared to other companies out there. We've talked about their cash hoard for a long time. The Apple consumer has been pretty consistent. Now they have this services business, and the thesis for that is largely based on that. But I guess I would argue that their ability shown over time to vertically integrate is also a source of stability for them, because not only do they control their supply chain and logistics, but even down to the components within the device, they go down and make refinements and vertically integrate there as well.
Yeah, no, absolutely. I think it's a very important piece to consider, because you've got the ability now to offset gross margin pressure that can come from an increased bill of materials. So if you think about 5G, you might be adding $30, $40, $50 more of content. But over time, you alluded to sort of the Intel modem business that they bought. Once they insource that, they won't be paying Qualcomm anymore for that particular piece. Once they get the technology to a point where they're happy with, that is an incremental margin that they benefit from that integration that offsets some of the ASP pressure that they have, or some of the incremental BOM costs that they might have. And so this is universally playing out across all of their devices. They're doing this. I mean, Apple actually, if you consider what they have done on the semi side, they are a real powerhouse. I mean, the A14 sort of chip with the bionic interface, I mean, it's an incredible piece of technology, semiconductor technology, that they're designing in-house. And so when you think about the progression, the cadence that it requires to get processor after processor, the ability to vertically integrate there is critical. So from a Mac perspective, it's not going to be super meaningful to margins because the volumes are just not quite as high. But at the same time, it is just yet another lever for them to allow gross margin stability, which I think is very important in maintaining that cash flow stability, ultimately, to your point, John.